Now, when we look at the BIS, the Bank for International Settlements, their survey, we can see the percentage of spot transactions by counterparty. Prior to 2010, the market share for FX spot transactions was dominated largely by commercial and investment banks who typically dealt on the Reuters dealing system or the EBS. EBS is the electronic broking system. These traders actively deal in the interbank market, or also called the interdealer market, and are called as market makers. The dealing rooms also have an active sales desk that deals with very large customers. However, since 2010, the market share for spot and total FX turnover is being dominated by other financial institutions such as smaller commercial banks, investment banks, mutual funds, etc. So we can see the importance of banks as participants in the FX markets. The total volumes by large and small commercial banks comprises of 64% of the total FX turnover. It is therefore very important to understand the market-making process of these interbank dealers and how they contribute to the FX price action. For the purposes of this survey, the BIS classifies reporting dealers as large commercial banks and investment banks and security houses that participate actively in the interbank market and have an active business with large customers. They generally deal, as we've mentioned, on the Reuters dealing system, which we shall look at later, or the EBS. Now, the BIS classifies other financial institutions as foreign exchange and interest rate derivative market end users. Now, these are liquidity takers. Example, smaller commercial banks, investment banks, security houses, mutual funds, pension funds, insurance companies, central banks, etc. They classify non-financial customers as corporations, non-financial government agencies, private individuals, such as retail traders. So once again, turnover by counterparty is important to understand so that we can get an idea of which group of investors influence the market and the extent to which they influence. As per the BIS survey, FX trading is dominated by financial institutions and accounts for 51% of total FX trading. Financial institutions are those players that are regarded as end users, such as smaller commercial banks, investment banks, security houses, mutual funds, pension funds, and hedge funds. Reporting dealers are large commercial banks, investment banks, security houses that participate in the interbank dealing market and have active dealing with large customers. Trading between dealers increased from 39% in April 2013 to 42% in 2016. However, the turnover in spot trading declined in absolute terms. We go into the motives of financial institutions and reporting dealers into more detail next, so that we get an understanding of how these players influence the price movements in the foreign exchange markets.